Hello and welcome to day 8 of this trading series. This series is reviewing for you guys all of the trades that were taken in November of 2024. I was taking these trades for Strategy Wars. We were in season 7, and for this season, I was competing on the Wave Rider team as well as the price action concept team. So the trade that we're looking at here is posted for November 13th. It was taken on November 13th as well. And it was using the 1 minute time frame on US 30. So I was switching it up a bit. If you've been watching this series, I was pretty much up until this day exclusively trading just NASDAQ 100. But for this day, I did actually get a US 30 entry. They do tend to follow each other similar. So for those of you who are into US indices, typically you'll see US 30 and NASDAQ 100 do tend to mimic one another. Now, that's not always the case, but they tend to follow one another in the grand scheme of things. So sometimes you'll see that I'll kind of bounce between them, and that's a pretty typical thing for me to do. It really just depends on which chart is giving me the better entry. On this particular day, NASDAQ 100 just wasn't giving me the entry that I wanted. The market had already kind of done its move. So I didn't want to get in too late, and I had peeked at US 30 to see if there was an opportunity to get in there, and there was. So we're going to show you guys what this trade looks like. But just keep in mind, if you've been watching the series, that the overall move for US 30 and NASDAQ 100 was initially really bullish. Then we started seeing a change in momentum going to the bearish side for the last couple of days. If you go back and watch day 6 and day 7 of this series, you'll see that. And then that's kind of what the same thing was happening with US 30, same kind of idea. So just bear that in mind when you're looking at the markup here, because it's very similar for US 30 because they do tend to mimic one another. So the overall move on the 1 minute time frame, you can see the greater trend has been bearish. And because of that, I was looking at the areas to the left of the current market at the time where I was looking to get in versus what had happened on US 30. Because remember, I was mostly marking on the NASDAQ 100 up until this day. So the US 30 hadn't really been marked up recently for me. So I did have to throw in a little bit of a price action zone as well as a little bit of a resistance line for myself. So that's what you're seeing there. And what I was looking at when I came into the market was the typical big move that happens during the New York session. And then as you can look, if you're looking at the times kind of, you'll see the consolidation that happens through the Tokyo into London session. And then usually we'll see a little more volume start entering back into the market during New York opening. So that is what's here on this little shaded box. This is pretty much around the New York opening. And you see, you do get this little bit of a breakout, a wick out that had happened here, and then another push back up. So I actually was not trading at this time. So it just happened to work out well that I missed this breakout and didn't get caught up in that fake breakout. But this potentially could have been a fake breakout for some people. And unfortunately, that is just what happens with breakout traders. You sometimes can fall for these little traps that they have, and that is just what happens, unfortunately. But I was lucky. Like I said, I did tend to miss this. And just for those of you who are breakout trading, and if you're finding that you're having a lot of these false breakouts, check the times that you're entering into these trades. If it's during a market open, I highly suggest waiting at least 15 to maybe even 30 minutes after market has opened. Let it do its crazy business here, and then kind of do what it needs to do, and settle down a bit and go in the direction it's meant to go in, because the opening can be very volatile and it can be super wicky, and sometimes you just get all kinds of fake breakouts happening for a few minutes, and then after opening and things settle down a bit, it'll start to trend the way that it's meant to trend. So that's just a little tip there. But for this day, yeah, I did avoid the opening a little bit. I was getting in closer to afternoon hours. And that's just because of the way that my life was working for this day. But yes, this is what I was looking at the time I was getting in. So I did come in. I saw that it did break from my price action zone. So this is my marked price action zone. And I was using that based off some price action that I'd seen over here to the left. And also, I mean, I should have probably marked this, but I didn't probably want to put too many boxes on confusing you guys. But then also, like, just noting that there is an area of consolidation that had happened. And there it was a large gap with opening. And that does happen sometimes, these gaps. And whenever you see these gaps, it's not unusual that the market will pull back to those gaps or even up, depending on which way the gap is printing, and it will be filled. So that's not unusual to see that, like, that the market did get driven to this area to kind of fill in this gap. And then usually it kind of goes on its way. But if you guys want to know more about gap trading, let me know. I can do a more updated video about gap trading. I do have one on my channel. It's pretty old, and I can definitely give you a more updated uh, video about gaps and how, like, you could look to trade them, or what you would be looking at when they happen in the market. But it is just worth noting here, there was a gap at this moment, though, when I like was in the market way up here. This gap really wasn't that important to me anymore. It had happened, which is nice to note. It had been filled already. So, typical style of me, we have an area of price action. We had a breakout from it. That's fine. But for me, by the time I was getting into the market and really looking to trade, we're kind of more in this area, and the price had already kind of just done its thing, broken out. And uh, most people here would probably say, like, "Hey, Christy, how come you weren't looking to resume the original bullish bias we had for so many days in the beginning of the series at this point?" And the answer is because we haven't actually changed the overall trend or the direction or the structure. So just because you're making smaller structure on a lower time frame, remember we're on the 1 minute time frame, just because you're starting to make that doesn't necessarily mean that you're actually seeing a full-on trend change. So you would need to see this entire move come all the way up and past this initial bearish move for me to say, like, oh, you have a potential trend change coming, that it would be changing directions. It does not do that. It's just retracing. So you had a really strong bearish movement here. The market's just doing its normal thing to come up and retrace. It looks to me about 50%. I wrote that on here. If you use a Fibonacci and you would draw the Fibonacci from the top of this move down to the bottom, I know somebody's going to tell me that's not how you draw fibs. Listen, I have seen so many people draw fibs so many different ways. And at the end of the day, all I can tell you is that as long as you use your fibs correctly, and what I mean by correctly is consistently more than anything, just use them consistent. However you draw them is how you want to draw them. There is definitely a right way to use them. And again, I could do a whole nother video and series on that. If you are in the trading floor community, we have a lot of content on how to draw them correctly. Bear is great at doing that and, like, explaining how to show you guys how to do it. Yes, we do cover that and teach it the right way. But I am acknowledging that a lot of people draw fibs in their own way. And at the end of the day, as long as the fib is being drawn consistently when you're marking up your charts and analyzing them, that's really, in my opinion, all that matters, because the fib is just going to do it. The market, it's analyzing the market in increments, right? It's just going to do what it's like seeing in increments. And as long as those increments are being consistently drawn the same way with your moves, you should be okay. So the key is consistency with your fibs. All right. My rant about fibs is done. All right. Just note, though, in my head, what I am visualizing when the market is shifting here and is starting to kind of make a little bit of, like, structure to the bullish side, it's not necessarily that it's making change of character type of structure. So those of you who like the SMC terms, like that change of character where you're, like, full on changing trend, it is not doing that. It's just retracing. So, or at least it seems like it's just retracing. And that's how I'm treating it. It's just going to retrace into this bigger zone that's beyond this one, the next zone of area. And, like, that is going to just kind of potentially trade within this area now. And as long as it stays within this area, then I would be okay. If it comes up into this area, then you're looking at potentially getting a little bit, like, more of a trend change coming if it were to make a new higher high over here. But until it does that, I'm still of the bias that we are just retracing this bearish movement. So hopefully that made sense to you guys. But just imagine if you're drawing a fib here on this entire move, starting here, ending down here, that somewhere in this area where the market had been getting to was about the 50% move of that. So you're retraced about halfway. Typically, the 50% retracement level is considered like the golden zone area for a Fibonacci if you're a Fibonacci trader. And usually around that area is where people look to start finding entries to get back into the trend that was happening. So, for instance, if you retraced about 50% to your golden zone and you have this bearish movement, you would be looking for sells around that 50%, maybe even a little bit higher retracement area. So that is what was happening here. Basically, we retraced about halfway ish of that big bearish move to the left, and I was looking for the opportunity to get in for south to continue with what was the stronger trend. So what you'll see here is that the market was coming down. There was like a dip here, and I was initially considering getting in at this point, but I was still trying to figure out my lots and all that stuff. And then I was also debating on where I wanted to put my stop loss, whether I would just cover the resistance of the zone that this was trading within, or whether I would go up a little higher, just because it is indices and indices can retrace pretty deep compared to like basic forex pairs. So I wasn't sure if I wanted to cover a little bit of a deeper retracement, but as you can see, I ended up going with just this level here, this resistance level. So it took me a few minutes to kind of work out all of those numbers, and at that time, the market did kind of push back up a little. It didn't change my bias by any means. I was just kind of waiting to see if I could maybe get in at like a little bearish candle or something like that. And there was some bearish pressure that did print, and that was when I decided to get in. And this just looked like it was probably going to be like a double top type of situation, just another tap on that area of price. So you kind of have like in my opinion, another little triple top, like a little tap around that price area here. A tap here is your second pressure against that price. And then this is your third tap, maybe even a little bit of a fourth tap of that price point before it gives you the drop that I was looking for. So just kind of price was just teetering around my entry and kind of just like slightly in profit, slightly not in profit for a little bit. And that happens sometimes, especially when you are doing things like with this like golden zone Fibonacci retracement. Sometimes you can go even deeper into drawdown just because it might have to hit a different level of that retracement. So that's just the risk you take with doing Fibonacci type of retracement stuff. But overall, usually what you'll see is that the trend will continue once you've hit that 50% or higher level. So that's pretty much what I was doing here. I was just looking for that. I did note in my write up that I did use a higher time frame, a wave rider signal, which, if you look at the previous days that I was showing in this series, even on NAS 100, there were higher time frame signals that were printing with a wave rider. So I was using that. I will say, typically with wave rider, you can get a lot of like spamming of signals on the 1 minute time frame. So with that, I was using a higher time frame when I use the 1 minute. Like I'll usually look at like a 5 minute or a 3 minute, maybe even a 15 minute, just to see if there's like a bearish signal that I should be going with and not maybe a bullish bias or something. So there was a bearish bias on the higher time frame with the wave rider signal. So I was just using that as my like higher time frame trend, confirmation. But you can see clearly that it has been bearish. So you don't really need the wave rider signal there. You can visually see that the overall trend has been bearish. But if you like that extra confirmation of a higher time frame with an actual indicator that has a trend bias to it, then that would be helpful for you too. So yeah, I had the overall trend that was bearish that I visually can see. Then I also had a higher time frame trend bias with the wave rider signal, and I was at about the 50% retracement mark of that overall move. So all of those things kind of were my confluences as to why I was entering into this trade. I kind of dabbled with the stop loss placement. It was just covering the resistance of the zone that I was working in. So I kind of went to the top of that. You can see where like the price point areas were that I was like looking at, and there's more to the left as well. And then as far as my take profit goes, I was not being greedy here. I just went for my support level. So if you're imagining that there was like a zone that I was working within because we broke out of a zone. So these were zones, we broke out of them, and this is the top of the next zone, your resistance. So I was targeting this support as my take profit. And it was also a bank number, a nice even number. Looks like it was probably 44,000. Oh, let's double check that though. Yeah, 44,000. And so that gives me a 1.6, almost 1.7 reward. And I do like to use the bank numbers when I can. I've talked about that before. Banks don't like hard numbers. They don't want to do math like that. They like to go into nice even rounded numbers. So even though technically like my support was probably at the top of this line, if we wanted to get very specific as to the number, I went a little bit lower to this bank number just because like it makes more sense if the bank would dip to there. It goes even further, like, I would have been more than fine. I would have been fine to even go to the support of this zone, this next zone, but, you never know that's gonna actually happen. So I played this a little bit safer, and I just went for that 1.6, almost 1.7 reward. And that is it for this trade. I did not take multiple trades with this or stack or do anything too risky. Entering in around the 50% retracement could be a little bit riskier. Like I said, you can tend to get really deep retracements. So I just wanted to kind of play it safe here, just risk the 1%, not anything too crazy, and just kind of get in and get out with it with this trade. I wasn't trying to hold anything or trail too far, too long. I'm maybe in hindsight I could have gone a little further and then continued to move, but again, I wasn't just really feeling the vibes for how much of a retracement we were going to get. Like everything retraces in increments when it comes to your trading, and like you never really know how long that trend is going to go or how deep that trend is going to go. And whenever I see like a decent amount of consolidation, even though this is Tokyo into London and it's expected, you do have to be concerned sometimes about like how exhausted is this potential move that was a pretty strong move for that day, needs to rest. It's giving a bit of a pullback of it to kind of recoup somewhat, and then hopefully it would drop again even lower. But, again, I'm just not willing to risk, like, having these massive rewards when I know what my bread and butter is just staying consistent. Like, I have a good win rate because I stay consistent and I take more probable trades versus, like, holding for really, really fun, fancy, high rewards. I'm better at taking, like, the smaller, like, 1 to 2 hour type of trades, and I'm more consistent when I do that. So I stuck with what I know, and, that is it. So that's what I did for this day, and like I said, this was the profits for that day. So $1,682.07 was added to the account that I had been working with. So that is it for, the November 13th trade, and that's it for the day 8 of this series, and I will see you guys back here tomorrow for day 9.